Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, January 24th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
It is good to have you back, and I have to apologize that we skipped last week's podcast. It was obviously a holiday on Monday in the U.S., so that means we really have quite a bit to cover, so let's dive right in. At this point, all of the December investment flow data is available. So why don't we start things off with what Japanese investors were up to at the end of 2021?
In December, Japanese banks unloaded their yen bonds by 1.4 trillion yen, while Japanese pension funds, trust banks bought more Nikkei equities by 943 billion yen, as well as foreign equities by 636 billion yen, cut their holdings foreign bonds by 429 billion yen, and yen bonds by 418 billion yen, and they put their surplus yen funds into TDBs and yen deposit account at the BOJ. Japanese lifers contributed to accumulate more super long-term JGBs by 570 billion yen. Japanese pension funds were the most active buyer of risky assets in December after the U.S. Fed began tapering in November and with expectations of a U.S. rate hike mounting in December. Japanese retail investors via Toshin investment trust funds contributed significantly to the increase in stock and investment fund purchases by 616 billion yen. In 2021, retail investors' preference for risk helped to push the rise in dollar yen. In December, retail investor money via Toshin funds once again caused yen selling flows.
Yeah, that's interesting, and I think that one of the things that I found most interesting in the data is that selling of foreign bonds. So you mentioned it, but in summary, I mean, you have banks, trust banks, pensions, and life insurance all net selling during the month of December. So pretty, and I think I looked, and I think the net selling of foreign bonds was maybe the biggest since April 2020 or something like that. So it's been, pretty big move there. So that was extremely comprehensive, so we know what Japanese investors were up to. What about international investors?
Okay. The Japan Securities Dealers Association JSDA data for December, released on January 20th, showed that overseas investors net bought 24 trillion yen of short-term TDBs, 2.5 trillion yen of medium-term JGBs, 1.7 trillion yen of long-term JGBs, and 51 billion yen of super long-term JGBs. They bought a net total of 19 trillion yen of JGBs in December. Ministry of Finance securities flow data for December, released on January 12th, showed that overseas investors contributed to net buy Japanese securities by 181 billion yen. This included net buying by 3 trillion yen of medium to long-term bonds and 1.5 trillion yen of short-term bonds, but they unloaded more Japan stocks and investment fund holdings by 1.3 trillion yen. Amid mounting expectations for U.S. rate hikes to begin in 2022, overseas investors first cut their holdings of Nikkei stocks, and secondly, actively bought up medium to long-term JGBs. Overseas investors net bought 562 billion yen of medium to long-term yen bonds between January 9th to 15th. Overseas investors have opted for JGB cross-currency asset swaps so far in 2022 against growing expectations for a U.S. rate hike. They appear to be maintaining their preference for JGBs, with more room to JGB arbitrage trade on dollar yen forward premium out of the fiscal year end.
Yeah, that's interesting. I mean, as we've talked before, the premium on an absolute basis for these JGB cross currency trades is pretty modest historically. But I think among that glut of U.S. dollars still out there, still attractive or clearly attractive on a relative basis.
Yeah.
So again, we know what Japanese investors were doing at the tail end of the year. We know what international investors were up to. One of the you also get some more detailed data, in terms of what investors were up to in November. Among that, the November U.S TIC data. I'm curious. There's quite a lot happening then. We had the Fed announcing the taper in November. So I'm curious if the data shows any material change in terms of Japanese investor investment flows during the month of November.
Okay. Japanese investors remain a net buyer of U.S. Treasuries to the tune of $14 billion and a U.S. agency bond by $3 billion and turned the net seller of U.S. corporate bonds by $606 million, according to the U.S. TIC for November released last week. With U.S. rate hikes looming, Japanese investors, in light of the liquidity of dollar funds, have been increasing their holdings of U.S. corporate bonds, rebuilding their U.S. Treasury holdings in the second half 2021 after redeeming and unloading U.S. Treasuries in the first half 2021. We expect Japanese to maintain their U.S. bond positions if the U.S. Fed hikes the FF rate in March, contributing to a flattening of the U.S. yield curve. Japanese investors were particularly active with bidding up their U.S. Treasuries holdings in November. This was in line with our projection for Japanese investors' U.S. Treasury flows. Japanese investors will help to alleviate stress as U.S. yield rise. If the uncertainties about the U.S. Fed policy stance lessen, Japanese investors could actively buy first U.S. Treasuries and JGBs, then emerging market securities and alternative investments in order to boost yields.
Yeah, well, I can definitely say that the weekly data shows net buying by Japanese investors, net buying of foreign bonds by Japanese investors the first 2 weeks of January. That being said, from a franchise perspective, I can't say that we've seen any real meaningful buying more recently, and the market certainly, the treasury market, I should say, certainly seems a little precarious. So we will have to see, and we'll obviously keep our listeners apprised. So I guess at this point, I think we're more or less running out of time. So I want to make sure that we don't wrap things up without your outlook. So take us through what you're expecting from yen rate, spot dollar yen, and yen basis.
Okay. Speculations out of the January 25th to 26th FOMC meeting that the Fed will hike FF rates in March has stoked the dollar buying, but rising U.S. rates have caused the U.S. stocks to plunge and trigger the yen buying. Yen has weakened somewhat against other currencies. The January FOMC meeting feels like a forerunner of a March rate hike. 4 rate hikes this year have been priced in, and a dollar and U.S. rates have risen further. Moreover, rising oil prices could support a rise in dollar yen as oil supply and geopolitical risks grow in the Middle East. Over the near term, we expect a neutral bias for dollar yen, with trading to remain in a 2 yen range, tight range between 113.50 to 115.50. The yen rate swap curve has risen, especially in the belly. The Bank of Japan squared addressed the inflation pressures at the January Monetary Policy Board meeting, but Governor Haruhiko Kuroda dismissed the speculation rate hike. Despite speculation upward pressure on rates for other G10 currencies out of the January FOMC meeting, we think that current levels could remain intact. As yen rates rise further, we think yen rates will return from the upward bias to a neutral bias. The yen basis curve has tightened. Weekly data for January 2nd to 15th from the Ministry of Finance shows that Japanese investors turned the net buyer of overseas securities by 368 billion yen. This was driven by net buying by 1.5 trillion yen of medium to long-term bonds as Japanese unloaded a net 1.3 trillion yen of stocks and investment fund holdings, swinging between stocks and bonds. Then, foreigners turned the net buy of Japanese securities by 2.3 trillion yen. They net bought across all asset classes by 1.1 trillion yen of short-term bonds, by 402 billion yen of medium to long-term bonds, and by 767 billion yen of stocks and investment fund holdings. This suggests that foreign buyers were rebuilding their JGB positions, particularly with TDBs, following the December JGB redemptions. Foreign investors have been active with JGB arbitrage trading. We feel that yen basis will take on a neutral bias from a widened bias.
Got it. So largely neutral across dollar yen, JGBs, and cross currency. Plenty going on though. So I suspect we might see a little bit of an unstable equilibrium among or across all those markets. But great stuff as always. And let's do it again next week. Thanks, Sekido-san.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.